Before we start, I would want you to hit that red subscribe button so that you never miss out on any of our videos. Hey guys, what's up? Welcome back to The Truthy. In 1987, Berkshire Hathaway chairman and CEO Warren Buffett laid out his stock market strategy in a famous way. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. But you know Buffett not bought any stock in 2020, so let's discuss about Buffett has not bought any stocks in 2020 and the reasons behind it are frightening. So let's get into the video. Warren Buffett is more worried than usual. The Oracle of Omaha initially exhibited his usual optimism on Saturday during Berkshire Hathaway's annual meeting, held online for the first time. But Andrew writes in his latest column, Mr. Buffett appears fairly gloomy if you dig deeper. It was unsettling on Saturday to hear him repeatedly say, "I don't know." He was careful to say that the markets would improve in the long term, though his time frame for certainty was decades, not months or not even necessarily years from now. About the current climate, he said, "You can bet on America, but you kind of have to be careful about how you bet." The clearest sign of hesitation was his closed wallet. Andrew notes, Mr. Buffett didn't buy up stocks during the recent market plunge, unlike his spending spree amid the carnage of the 2008 financial crisis. Back then, he wrote an op-ed in the New York Times after a month Lehman Brothers filed for bankruptcy. In the near term, unemployment will rise, business activity will falter, and headlines will continue to be scary. So, I've been buying American stocks. Mr. Buffett missed his chance to strike the type of high-price rescue deals like the one he offered to GE in 2008. Bloomberg notes, because of the Fed quickly stepped in with a slew of bailout programs, Berkshire is now sitting on $137 billion in cash. Mr. Buffett sold his holdings in the four biggest US airlines, saying that the airline business changed in a very major way. All told, Berkshire sold $6.5 billion worth of stocks last month, putting most of the money into treasury bills. The meeting came after Berkshire reported a $50 billion loss. In the first quarter, Mr. Buffett has long argued that swings in the value of Berkshire's investments aren't a good indicator of the company's health, but the conglomerate also recorded hits to wholly owned operations like its Burlington Northern Railroad and retail businesses. Mr. Buffett left investors with a silver of hope. The American miracle, the American magic, has always prevailed and will do so again, he said. J.Crew is the first big retailer to fall in the pandemic. The clothing brand filed for bankruptcy protection this morning after the coronavirus pandemic pushed the chain over the edge. It's unlikely to suffer alone. The retailer plans to hand over control to its creditors. Led by the hedge fund Anchorage Capital by exchanging $1.65 billion in debt, the company will keep Manuel, the denim brand it had once considered spinning off. E-commerce operations will continue to run, and stores will reopen once lockdowns lift. J.Crew was already in bad shape, struggling with a heavy debt load and strategic missteps like failing to focus on e-commerce and fashion trends. It's the latest sign of trouble for the retail industry. Sale of clothing and accessories in the US fell by one more half in March, and April is expected to be even worse. Who's next? Neiman Marcus and JCPenney are still in talks with creditors about financial rehab plans, with Chapter 11 considered in both cases. Other retailers like Brooks Brothers have hired advisors to consider their options. Not bought any stocks. In 2008, Buffett penned an op-ed in New York Times where he indicated that Berkshire was putting that strategy into action as the financial crisis worsened. In the near term, unemployment will rise. Business activity will falter and headlines will continue to be scary. I've been buying American stocks, but the COVID-19 pandemic has left the Oracle of Omaha uncertain about the near-term future. Berkshire Hathaway's annual shareholder meeting, dubbed the Woodstock for Capitalists, was forced to go virtual this year. And despite Berkshire Hathaway's record cash pile, Buffett says he has not been on a buying spree because there hasn't been anything that's attractive. Berkshire sold its entire stake in airline stocks, and while Buffett praised Federal Reserve Chairman Jay Powell, he remained concerned about the extreme nature of the Fed policy needed to get through this crisis. Still, there's one stock market bet that Buffett did not waver on this weekend. he believes that the average investor should buy a broad stock market index fund for a long period of time instead of the following advice from stock pickers. In my view, most people, the best thing to do is owning the S&P 500 index fund. Buffett said in Berkshire annual meeting, if you bet on America and sustain that position for decades, you'd do far better than buying treasury securities or far better than following people. Or perhaps with a bias, I don't believe anyone knows what the market's going to do tomorrow, next week, next month, next year, Buffett said. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss out on any of our videos in the future. Also, watch the 2 videos that are on your screen because I am sure that you'll love them. With that, I'll see you in the next video.